Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we're seeing green arrows around the world this morning on the news that we've struck a deal with Iran to lift some sanctions. In terms of our overseas markets, we've been talking about Japan and China all year, Scott, and how the opportunities remain there pretty strong. It looks like the trend remains intact.
The trend is your friend. That was established because typically it does create opportunities. And if you look here at Japan, or EWJ, which we've talked about quite a few times this year, I know that was the top and everyone said game over, and that's when it became game back on this outside day, and then slowly just trending higher. You've had a lot of opportunities to get some exposure to the Nikkei, and now it looks like Japan will be making new 2013 highs. And if you look here at the FXI, which gets you exposure to Asia or China, look at the double bottom, which we mentioned back here over the summer, and then this is when it broke the downtrend, and then boom, big gap up, digesting well, and it looks like the FXI should be making new highs at some point this year as well. So opportunities are still there. It's all how you approach it.
Right, so still looking good there. And in terms of our markets, earlier in the week, last week, we talked all week about the controlled pullback in the markets, which Scott said was healthy action, and on Friday we closed above 1800 for the first time, so clearly that action was healthy.
Pullbacks do happen, not crashes,
right.
And at this point there's still some people out there saying we're going to correct 15%, 30%, whatever they say. Meanwhile, we continue to hold where we have to. And for chart watchers, all you have to do is measure the action and then measure your own commitment. And if you look at the trends in the S&P for this year, they've been very strong. So you look at the longer term chart, here's the red dog reversal that started this rally about a year ago in November, and then it got tested 1, 2, 3 different times, so 3 different spots you could have maneuvered your portfolio. And then this has been the recent move, and it's been pretty darn calculated. This is the red dog reversal right here at 1655. Here was your igniting bar that engulfed this descending trend line. Here we broke above the prior high, and then wound up. This was that last wishy-washy time where you had the big down day, but it got engulfed the following day. So if you took some risk off here, this was your spot to put some risk back on. And then what did we do? We just retested 1775, and now here we are at 1800 plus.
Meanwhile, gold is down again. So clearly the downtrend that's been in place there remains intact as well.
Yes, and if you're a bug, you're bugging out about gold, but if you're a technical trader, it's been in a downtrend this entire time. So
right.
Down $10, $11, say, shouldn't be a surprise. If you look at the GLDs, you'll see that there are a few different spots to make adjustments. So if you wanted to switch gears, one of them, if you remember, came right at this little pennant type pattern right there around 161. Then it broke macro support here around 150. That was your quick acceleration to the downside. Here was your bounce, and now that's where we are. So I would say the only other point of reference we have right here is right around 115. So we'll see how GLDs handle that 115. But overall, there's been just a trend that's been strong. Same way you've had an uptrend for the markets, you've had a downtrend for the metals.
Right. Well, let's turn the spotlight to high beta tech, where a lot of these names are hovering at upper levels. Google reclaimed its 8-day on Thursday and then managed to close above that key moving average on Friday. So do you think upside momentum here will remain intact today?
It would be nice. I'm long Google, and I've been trying to sit for this move. It had great earnings, had a big gap up. There's been commitment to it. It just hasn't broken out. It tried a week or so ago, but if you look at the chart here, it looks good. It looks tight. That's that gap up on earnings. Here was a nice little bull flag. Gave you a little bit of movement, and now we're consolidating again. So I'd love to see this thing break above 1,040 and actually close above it and get some momentum there.
And Amazon made a new high on Friday. Wondering this will be a big week for Amazon. We've got Thanksgiving, we've got Black Friday, and of course Cyber Monday next week.
And Hanukkah. Hanukkah's Wednesday,
there you go.
People need to get some presents before. So with that being said, this stock also is on the highs, technically acting well. I know a lot of people doubted because of their valuation or whatnot, but technically here was that 2-day move that took back the highs, been digesting above it, and now your pivot is 374.50. Above that, it could definitely extend. This one's a little harder for me to trade, but it's still, making its move.
How about Netflix? We still have this one consolidating above the 8 and 21 day, so still looks like it's gearing up for a breakout.
It's getting tight, and Netflix doesn't stay tight that long because you have shorts trapped. There's volatility there. If you look at the chart here, ever since that, they sold the earnings on that day, you've had a little micro action. But basically this new little trend has stayed intact, and now it's knocking on that door of, what is that? That's 350.50. If it were to get above that, I would think you get another squeeze up to about 360, and the higher it goes, the less power this big ugly candlestick could have.
And Apple basing above its 8-day. This one potentially maybe could get a push this week also with the holiday shopping.
I certainly hope so. Either that, I want it to either fall apart or get going, because
just decide already.
Decide, get it out of our hair. Because the stock, every time it gets going, it gets sold. Every time it looks bad, it hangs in there. So it's only a matter of time before something's got to give. And if you look at the chart here on Apple, you will see this tight pattern. I know it's been very frustrating within this pattern, especially when it almost broke out here and failed. So we'll see what happens. If it's going to do something, this would be the week you would expect it to. You have this lower pattern here that it got ignited 2 quarters ago. You had a big move here, consolidated, gave us a nice trade into there. So question is, can it happen? And if it's going to happen, it's going to have to get above and stay above of just say 523 with authority. I'm in this stock, and I'm hoping I could add in at some point by the end of the week or next week. You could take out this 540, but it's got to clear this pattern.
All right, coming up, we're going to go in the trenches with biotech stocks, where a lot of these names broke out to new highs last week. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with biotech stocks. We know this group got a lift on Biogen's news last week that it got its MS pill got protection in Europe. But let's take a look at the group first. The IBB was able to break out about 3%, right?
Yeah, and this group's been strong all year. For me, I get a little wishy-washy with biotechs because just like you saw that news, sometimes you get the bad news. So for some individuals that don't want actual individual stock exposure, just in case one thing blows up, you could have been in the ETF, right? The ETF, has a little less volatility, but overall, look where that is. That closed at 220 at a high, closed strong even before that news, so it was ready to get broken out. And then, so if you took it home for follow through, you got rewarded. I wish I saw that close strong on Thursday, because that would have been a nice move into Friday's highs.
Yeah, and Biogen had quite the nice move on that news. It rallied more than 13%.
That's a big move.
Yeah.
Yeah. So someone's having a Thanksgiving or is thankful for this stock that's in their portfolio. With that being said, this too, looked like it was closing. Actually, look at that. Closed strong on Thursday. So if you do take stock, overnight looking for follow through, even in bios, you got a nice reward right there without even knowing what was. If you do the right trade, sometimes it happens. Anyway, this is the point of reference, 274. Let's see if it needs to digest above for a while and then make another move.
And just in case maybe you're interested in playing some different names within the group, let's check in on Celgene. That was able to put in a new high at 164.
Yeah, and this one, the only problem is in this market or this stock is everything's been up like 4 or 5 days. So if you look at the chart of Celgene, still looks great, but look from where it just came from as it just continued higher. So if you're not in Celgene at this point, I think it's just hard for you to enter it now. If you haven't trimmed and trailed yourself out of out of all of it, maybe into some of this strength, you sell some. It's extended from the 8 and the 21, but overall it looks good. It's just I don't see a buyable spot to initiate here.
Could Regeneron Pharmaceuticals be an easier one to play?
Let's check it out. This one actually, you know what? Look at this pattern. This looks good. This one has a descending channel, right? So there, at least you have a points of reference here. So it's been in this range almost for 2 months. It did close strong on Friday, and it's just starting to go. So this would have been called my day one. So with that being said, above Friday's high of 294, it can get going because it's one of the few that's not at 2013 highs, and that's all the way up there at 320. So, this looks like it at least has a setup if it wants to go.
Okay, so there's a potential one for you. How about Alexion Pharmaceuticals?
Let's take a look there. Oh, look at this. Nice and tight. Nice little wedge formation. So if this group wants to continue, this one also has a buyable pattern here. This was the last time it had a big move. Came in, digested. It's trying to knock on the door of this trend line. So above this 124.69-ish, that would be the spots. But when you play for momentum, make sure momentum stays. So if you're playing a breakout and that's all you're doing it for, buy the breakout price, and then it has to stay above it for you to stay.
All right, let's do some quick hits and talk Facebook. Showed relative weakness on Friday, dropped about 1% while the S&P, of course, made new highs. So little flashing a warning sign there.
Yeah, this one, it looks like it has that head and shoulders top that everyone's staring at and talking about. It underperformed the market last week, so this one could be a little touchy. So with that being said, you might want to Facebook it. Anyway, if you take a look here at the chart, you'll see what I'm talking about. First, this was that big gap up that wound up giving us a nice trend leading into this pattern. And now, the market was strong in those 3 days, and it wasn't. So I would say at this point, if it gets to 45.70 and breaks below it, you could get a quick move down to 42.55. In order for it to relieve some short-term pressure and negate some of this, it's going to have to get above and stay above 48. So I think this is a little bit of a battleground right now in this stock where, it just had a huge move and it's trying to correct. The question is, can you get downside follow through? Stay tuned.
What about Tesla? Would Tesla be in a void at this point because we're seeing a series of higher lows in place?
Well, Tesla tried to break below a key level on Friday and it went below, came back above it. We know that's called the red dog reversal. So the question is, can that stick and can this, become a bigger trade? We've talked about this stock so many times this year. This is when it truly changed, when that trend broke. I remember the market making highs and this one didn't. And then even if you didn't get out there, in earnings, you could have sold into some of that strength, and if you don't take stock into earnings like I don't, you save yourself some pain. And the question is now, what kind of trade could we get out of Tesla? So with that being said, it's been stair-stepping lower. So what do we know? We know the low here is 117.93. You have this small little trend line here. So in order for there to be a bounce that might be tradable, it's got to get and stay above this 128. But the longer it stays here and doesn't bounce, the higher the probability this floor gets taken out. So with that being said, it's just a different stock right now. These momentum names change, and right now it's just the speed and composure always changes.
Right.
If you measure it, you get out of the way, and now there could be an opportunity today if it wants to bounce, but know that 117.
Okay. Well, consumer staples have been in play recently, and we have Procter & Gamble hovering at highs above all key moving averages. Could this be one to play?
Yep, above 85, I think it's a buy. It's been very strong.
All right, don't even need to look at the chart. How about CL? That's another consumer staple stock that's looks like it could see some upside momentum.
Yes, and we'll take a look. So let's look at CL. Even these consumer staples kind of look like technology charts. This was when it broke above this. It's been nice and tight for the past, I would say, almost month, starting to break out above. So at this point, it's not that overbought, and it has room. You could see 68 or so on this thing this week.
All right. How about VJet? We talked about this one last week. We had that recent sell-off. It looks like it's trying to contain the damage, but what do you think here?
This one's different, okay? It's broken. There's going to be a lot of footsteps in it, but there's going to be some trades. So now you just take smaller trades. I would say put it on a 5-minute chart or on a 15-minute chart. This trend that was strong, a while back that people were following, broke with that whole group when Triple D flashed that outside day last week. And then obviously that this stock, got written up in an article. So anyway, with that being said, things change. This was the IPO. This was a great new issue, by the way. Look how it closed strong, got your follow through, and then look how it broke above this wedge. And it gave you a huge move, which at this point I don't think many people were buying and didn't even really expect that to happen. But anyway, this is when it traded below the prior low and the group got pressured. Now you have this small little lower pivot. So if you want to trade this lower pivot, if it were to get above 38.50 or 39, maybe you get a bounce back to 42 if it wants to retrace a little bit. But if it doesn't bounce back and stays in this range here, at some point it might actually even break below that pivot low of 32.26. So there should be some small opportunity here. I would just go into the small time frames and trade it a little bit quicker.
Well, and we know that the banks have had quite a move over the past 2 weeks. Could you still be a buyer of a stock like Bank of America?
It depends on your time frame. Do I think Bank of America can go to 18 to 22 in 2014? Yes. But look at it now, how many days up in a row, this was your day to buy it, right around 1430 or right in here below 1450. Now up at 1560-ish, with a move like we just saw, probably needs a little bit of time. So I would say don't just chase it if you're trying to get short-term money. I do think, though, the pattern in Goldman looks kind of tight, right? It's coming up against 169, hasn't broken through here, in a while. So that being said, this one I think has the best tradable setup, even though it's lagging a little bit. Usually Goldman leads, but take that with a grain of salt. So right there above 169, 170, I think it can go. And you look at something like Citigroup that I'm also long. I'm long that, and Bank of America, no Goldman. This was your last little setup here, and this too is just starting to knock on that door of resistance. So sometimes it rests first, and then other times it blasts through. So I think, I think Goldman and Citigroup have a bit more room, and have a better setup, where Bank of America a week ago, that was the place to be.
All right, well, of course, we are heading into a holiday week. What will you be focusing on today?
I'm just going to see if some of these setups trigger. I'm going to try and, I think I have 6, 7 longs. I'm short the spiders as a hedge. I've been trying to do that since last week a bit. Some things are extended, some things aren't. So I think at this point, with the shortened week, look at the price patterns, try and find some trades, take some trades, and don't make it too overly complicated, especially on a holiday week. I'd rather see you enjoy the holidays, be with your family, instead of getting frustrated by the market. But there will be some opportunities, so if they show their faces, go after them. But maybe take a little less and just have a little less stress. Life's too short.
Exactly. With that said, happy trading. Have a great day.